Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Kathy Jones joins us to give a first look at yield. I look at total return on bond funds since the bond market broke 3 years ago, whatever now, 2.5 years ago, and it ain't working. What's the value proposition in bonds versus buying the Paul Sweeney 2-year yield forever?
Yeah, well, we did have positive returns last year in bonds.
Nice.
If you look at,
you got to do better than that.
Yeah, I know. But we did. The ag was up in most categories, except for very long-term bonds or international bonds had positive returns. And you know, the reason you buy bonds are for income, and right now they have income. Yeah. You buy them for capital preservation. That's because borrowing
you want
default,
to get your money back.
You can get your money back, and for that sort of certainty, right, and for diversification. So at some point sometime in the future, the stock market might go down, and generally bonds do pretty well in that environment.
Kathy, for a long time we had an inverted yield curve, and some folks like Cam Harvey at Duke University would tell you that means a recession's coming. We didn't get it. Now we've got the yield curve steepening. I got the 10-year at 4.60, the 2-year at 4.25. What is that steepening yield curve telling us?
Yeah, this was one for the record books. We didn't get the recession after the inverted yield curve. I think it's telling us two things. It's telling us, yes, the market still looks for the Fed to cut a couple of times at the short end, but the long end is reflecting all of the risks that we have for inflation and for policy that may prove to be inflationary down the road. So we're going back to a more normal, steeper yield curve, and I think that continues.
So what am I doing in terms of credit here? Do I take credit risk here, or do I just be comfortable in my treasury market?
Yeah, I think you can take some credit risk. We're cautious on overdoing it on credit, going too far down the spectrum, because we are starting to see defaults rise in the high yield market and the lower credit quality part of the market. But investment grade companies, you know, they have cash flow, they have strong earnings.
Right.
It's really hard to fight that. So we'd continue with the investment grade and, you know, in the intermediate duration category.
The real yield, what does that indicate to you? The nominal yield, folks, I think it's the beginning of the year, like every jargon we use, we got to redefine it.
Right.
Even if it slows the show down to a Lisa Mateo crawl. We don't want to do that. But the real yield is the inflation-adjusted yield. There's different ways to measure it, but the answer is it's up and away. Does that impinge on Liz Ann Saunders' economy?
Well, I think at some stage of the game, other asset classes may look at the positive real yield of, say, 2.5%, maybe moving up to 3%.
Really? Are you? Well, we got to make some news here. Come on. Are you? Can I put that out on YouTube? Kathy Jones models 3% 10-year real yield.
I don't think that it's out of the question at all. If you get a 5% 10-year, which is within the range of potential outcomes that we have, and inflation continues to drift lower, you're going to get very close to that 3% real yield. And I would think at some point other asset classes would pay attention to that and say it's competition. But in terms of the economy, I noticed Kathy Chantic. I always have trouble with her name, but I listen to her very carefully.
All right, we got to take a poll here right now. Lisa Mateo, do you have trouble with Kathy Bastiancic's name?
Bastian.
Nailed it. Paul Sweeney, do you have trouble with Kathy?
I do, and I just say,
name?
hey, friend, welcome to the program.
I think she's a terrific economist.
She's like a killer economist.
I know.
I'm sitting there butchering. Mark Crumpton keeps a list of all the names. Thank God I can pronounce Jones. But Mark Crumpton keeps a list of all the names I butchered. And at the top of the list is Kathleen Bastiancic. Good morning, Kathy at Nationwide. Tell us about Kathy's analysis.
Well, she talked about productivity. So we can have high real yields if we have strong productivity. And that's a question mark. Does that continue or not?
What does our Federal Reserve do over the next couple of meetings here? Because now, I mean, we kind of started thinking 9 months ago it could be multiple rate cuts. Now the market's down to maybe one or two. What do you think?
Yeah, I think they're very cautious from here. They have to be. We'll get the minutes later this week of the December meeting, which should be very interesting. But they have to be very cautious because there's so much policy uncertainty on the horizon, and the economy continues to do better than they thought.
Thank you so much for coming in today.
Thank you.
Liz Ann wouldn't have done this. I mean, she's the cold. She's like, no way.
Yeah, she's down in Florida.
She's
Good for her. Yeah, exactly.
Yeah, right. Liz Ann's smart. The rest of us not. That's all there is. Kathy Jones, thank you so much for getting us started.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Lori Calvasina of RBC Capital Markets. Lori, up 20%, up 20%. How do you model up again?
Well, thanks for having me, Tom, and Happy New Year. Look, I think you can't really do it from a valuation perspective. My valuation model is the most conservative one in our targeting process. But I do think on the sentiment side, we had an important development in December, which was that everybody got worried. And so we saw AAII net bulls fall from a range, that had been one standard deviation above the long-term average back in October. It stayed elevated as we got into early December, and it's pulled back now to the long-term average if you look at the 4-week average. And if you look at the weekly data point that came out last week, I think the bulls and the bears were basically at parity with one another. And that actually improves the setup for stocks going forward. So I think we can get there. I think you can also have earnings help drive the market higher. I just don't think you get it from a valuation expansion perspective. I think we've really done the valuation expansion that we're going to do in this cycle.
Hey, Lori, how about earnings? How important are they going to be here? It seems like the Fed's not going to be doing too much heavy lifting for me in 2025. It feels like, and I can't imagine getting multiple expansion from here. So it feels like if any performance we're going to get in 25 is going to be earnings driven. Is that a fair assessment?
I think you hit the nail on the head, Paul. And look, I do think earnings have some challenges as we go into this next reporting season, namely margin expectations have been coming down. If you look at the bottom-up sell-side consensus estimates, that's been underway since the middle of last year, actually, but it's continued as we look at these past few weeks. And if you think about, sort of the dollar, a stronger dollar typically causes downward revisions. And I know the dollar's been all over the place, and showing some weakness, at least last I checked this morning. But the 4Q strengthening that we had, that cake is already baked. So we've got to sort of see what companies say about that. And look, Paul, I've been doing this a long time. It always amazes me that when we go through these periods of dollar strength, I go in and, read earnings call transcripts, and companies, especially in healthcare and tech, like to blame weakness on the dollar, that everybody saw in real time, but nobody marks their models until we actually, get to the end of the quarter. But I think you've got some little issues like that. And I do frankly expect companies to keep the bar somewhat low, just that we do still have some uncertainty in terms of things like taxes and tariffs. So I think earnings are going to be good and solid, but maybe not a ton of excitement here in the very short term.
I want to talk about religion, Lori. And that what I saw in all the wrap-ups of last year in this great bull market, take it back to Ben Laidler and Christmas Eve of, I believe, 2018, is the worship of free cash flow. The have-nots, the people that aren't trading at NVIDIA multiples, do they have a new religion to emphasize free cash flow growth? Or do we await that? Why aren't more companies saying we got to boost free cash flow?
It's an interesting question, Tom. I'll tell you, it's not a big part of my process. And that may be because I'm sort of overly influenced by my small cap days, and I am a data nerd at heart. We've talked about that on this show before. But I will tell you that when I look at different databases and try to bring in free cash flow data, especially free cash flow estimates, it's really kind of garbage-like when you try to aggregate it up to the market level. So I'm not, to be honest, a big, sort of part of that philosophy.
So, Lori, as we think about 2025, it seems like, again, 2 years in a row, we've had 20% plus returns in the S&P 500, in large part tech-driven. Quite frankly, it seems like this has been a tech-driven market for 15 years. Is tech going to be a leader in 2025? Does it need to be a leader in 2025?
It's a great question, Paul. And if you actually go back, and I think it was after Trump's first victory, we went back and looked at sector performance in the 12-month period after that first Trump victory, that November election, and we found both financials and tech outperformed. So it doesn't shed a ton of light on the growth versus value trade at the sector level, but we did see growth stocks generally outperform in that period. And we've seen growth stocks, big mega cap tech type names continue to hang on to their leadership here in the aftermath of this election as well. And look, I think a lot of people want this market to broaden out. You can count myself in that camp.
Yeah.
That being said, I think we have to understand why we have had so many head fakes so far. And it is simply because the value part of the market, the rest of the S&P, whatever you want to call it, has just not put up superior earnings growth. And the Mag 7, it has been fighting back. And we see it in terms of near-term consensus expectations. They're still dominant, even though a ramp down is anticipated, and long-term earnings growth expectations are still sitting at big highs relative to the rest of the market. And that is sustaining the premium valuation multiples. Until you break that, and I think a hotter economy than what we've been expecting, like more like a 3% economy than a 2% economy, I think can help that value part of the market see earnings growth, move up. But we're just not seeing it yet. And so I think, to be honest, if I look back at my December meetings, this whole go with value broadening, it just seems so consensus right now, especially in the fact that the earnings growth dynamics aren't shifting.
Lori Calvasina, I look at where we are, and what I'd suggest is sort of the zeitgeist now is everybody's pulling away. The last 5-6 days, I think like 365 days ago, we had the same thing going on. How do you interpret the pulling away we're seeing right now? People selling Mag 7, people lightening up.
Yeah, look, I think there is a natural inclination to take some profits when you've had this frothy sentiment in place. And I don't think people realize how much the sentiment started to unravel, but there's been a big concern about valuations, and we've got a lot of uncertainty on the policy front. So I do think it makes sense to sort of retrace here a little bit, take some profits, and see where we need to redeploy in a bit.
Lori, thank you so much. Lori Calvasina, RBC Capital Markets, just a huge value add.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Across this nation on your commute this morning, the one everyone in transportation is watching. No, Paul, it's not the build out in New York.
I know.
Or what they're doing with JFK Terminal 1. Janno Lieber joins us today, running the MTA off of this congestion tax in New York, and we're thrilled that Bloomberg Surveillance will bring him to you for the entire rest of this hour. An incredibly busy day, important Monday for you. I've got one question which Kriti Gupta in London actually brought up, because I know Paul's fired up here with a bunch of questions as well. Part of the bargain in Stockholm is they have a world-class taxi service. Part of the bargain in London is they have a world-class taxi service. I'm in taxis constantly here that are third world. How does this congestion tax get us, as Kriti Gupta mentioned, to a better taxi experience?
Well, I think, Tom, thanks for having me. I think that the taxis in New York are dominated, as we all know, by Uber and Lyft, and they actually are looking forward to having clearer
But I'm going to
streets.
interrupt here. You're telling the poor people of New York City to take an Uber?
Yeah, you know what? Right now, the cost difference between Uber and taxis is not all that great. I'm not in the taxi business, so I'm trying to answer your question. But the point is, with less congestion on the roads, you're going to have the taxi industry, I think, is going to do better. It means people will be able to move more quickly, pick up more rides, and for what is actually 75 cents per ride, when the average ride of a taxi ride now in New York is like $25. So 75 cents a ride, and they're going to be able to move much more quickly, take more rides. I think it's going to be good for the industry.
Part of the outcome that you guys are hoping for, that we're all hoping for as a city, is reduce traffic, reduce congestion within the city. When will we know if that's actually happening?
It's a good question. It's going to take a while to take effect. New Yorkers adjust, and they are resilient, but it's going to take a little while. So we're going to be watching it very closely, day by day, week by week. I don't expect to see some dramatic change on the first or the second day. Over time, we're expecting a 10 to 20% reduction in traffic. That's what we're shooting for. But Paul, the big issue here is New York is leading. New York is, and I'm thinking, I know you're an international outfit. New York is becoming a 21st century city. We just did 2 train terminals in the last couple of years. LaGuardia Airport, a total rebuild. It's #1 in the country. JFK is getting rebuilt. I know your Newark Airport is getting investment. This is about being a 21st century city where we don't spend all our time stuck in traffic. The business community has always supported congestion pricing under Mike Bloomberg's lead, in part because congestion and time spent in traffic is a tax on our economy.
A lot of folks view this congestion pricing as simply a tax on consumers. Your budget is $19 billion, I believe, at the MTA for 2024. You need more money? That's what a lot of folks are saying.
Listen, this is, as you said, this is 90% of the people who come to the central business district take transit. We're carrying 6 to 7 million people a day on mass transit. So, we have to pay a lot of people, and 80% of our costs is wages and pensions and benefits. No question, we have to pay a lot of people to deliver that service. But the bottom line is congestion pricing is about the benefits. It's about not just money for the MTA, but about lower traffic, cleaner air, safer streets, and a more functioning economy. That's the goal. That's why London did it, and that's why we're following.
I was in Paris last week, and all I can say is what a difference in congestion. It was just beyond pleasant. When are we going to see results? Are we talking Tuesday? Or are we talking 2027?
Listen, I don't want to sit here and tell you I have a crystal ball. The bottom line is adjustments are going to be made. It's going to definitely take place over time. Let's watch it together. There's going to be total transparency on the MTA side. We're going to have a dashboard out for everybody to look at how many cars came in as compared to before the system went in, and how many of them are chargeable, and we're going to be monitoring it closely.
Number one question I get is what happens, folks, for those of you across the nation and worldwide, the outer edge of Manhattan, north-south, is the FDR and the West Side Highway. What happens to those two important thoroughfares where I believe there's no congestion tax?
Yeah, well, the idea is that these so-called excluded roadways that are on the edge of Manhattan, that people should be able to use them to get around the congestion zone. Listen, we always talk about drivers like they're the dominant reality. I know you guys take transit. 90% of people who come to the central business district take transit. There are only 130,000 people coming to the CBD who drive their personal cars as opposed to 1.5 million jobs. So I don't think that we're going to have some catastrophic traffic impact because a portion of those people do elect to take transit, or that people are avoiding the charge. I think we're going to see it all get baked in over time, but we're going to watch it closely, and we're going to talk to you about it.
We have a new president coming in a couple weeks.
Here you go. You're going tunnel, right?
Exactly. No, just what do you think President-elect Trump will do, if anything, about this plan?
I don't know. We got sued in every court from east of the Mississippi.
I was going to say, is there anyone who hasn't sued you?
Yeah, but
Lisa Mateo, are you filing this morning?
Yeah, but you know what? We won every lawsuit because we did a 4,000-page study. The feds approved it. It took 5 years to do the study. It takes about 5 minutes to figure out New York has a congestion problem if you stand in Midtown.
Right.
But what President Trump is going to do is, I'm not certain. There's a lot of Republican politicians who are against mass transit and who rail about this. President Trump is also a New Yorker who owns office buildings, and 90% of the people who work in his office buildings come on mass transit. So I'm optimistic that he will get it.
We are honored. Janno Lieber, CEO of the MTA, with us today for this extended block here. We welcome all of you on Bloomberg Surveillance nationwide in your commute, and on YouTube. Subscribe to Bloomberg podcast, to say the least. I have talked to Mayor Adams not once but twice about a New Orleans experiment, I believe over in Europe, of free bus service for the poor. The congestion tax is about fancy people like Paul Sweeney in his ginormous car, or me being driven by the Bentley down Fifth Avenue. Forget about it. What do we do to help really needy people who need to commute from, I'm going to say, Rockaway Beach up to wherever?
Okay, well, let's just be real, because 95+% of those people you're talking about, low-income people who live in the boroughs, take transit. They don't drive because parking in Midtown is
Should we offer them free bus service?
But you know what we're offering? What we're offering is we have for the first time, the MTA, under Mayor Adams' leadership, has been pushing a fair fares program that cuts the price of transit in half for low-income people. And you know what? Tom, transit is one of the very few things that makes New York affordable. It's 15% the cost of owning a car. It's already a good deal at full price.
Right.
At half price, it's out of sight. And so I'm confident we're dealing with the concerns of that community as well as the broader goal.
What is the delta on going from Danielle is all over me here. She and Michelle Kasky have done great work for Bloomberg on this. Danielle Moran. What has been the delta from $15 down to $9? How does that change the Janno Lieber world?
Okay, good question. Listen, Governor Hochul.
It's my only good one of the day, so stay with us.
Yeah. So Governor Hochul, after we were moving towards implementing in June, decided that she wanted to take away the sticker shock, and so she, after a pause, knocked the price down by 40%. So instead of $15 for
did she call you, or did you learn about it?
She
from
called me.
Bloomberg News?
She called me. It was shortly before she announced it, and it certainly was a shock to the system for some of the folks who have been working on this. But in the end, it has worked. What it has done is it's message to the public that we are looking at an easy implementation, that she's worrying about affordability, but we're getting the benefits. Tom, you said, how does it affect the MTA? How does it affect me? It will take us a little longer to raise the statutorily required $15 billion, but we have enough work going on that we can continue to make progress on rebuilding the subway system. In the meantime, it's been a net positive.
We're going to be, one of the intentions for congestion pricing is to drive more of transit folks to the subways. How about safety of the subways? Where are we there? Because there's a concern is that you're well aware that post-pandemic maybe not.
Listen, the overall stats are positive. Last year we were actually 12.5% less crime than 2019, the last year before COVID. But there's no question that some of these high-profile incidents, terrible attacks, have gotten in people's heads and made the whole system feel less safe. And there's a little bit of disorder that's crept into the public space since COVID. There's no question about it. I say the criminal justice system has to do its job and make sure these people who do that kind of stuff, most of whom who have long rap sheets, are put away. There are very, very few of these folks, but they have an impact on people's sense of safety, and we need to deal with them in a way that protects the riders and the public.
First time I went down the stairs in a Tokyo subway, there were the guardrails or the walls or whatever. We put a man on the moon. This is New York City. You mentioned the shining light of LaGuardia, $19 billion on JFK as well. Can't we put up guardrails quickly in our subways?
You're absolutely right. The quickly part is the one challenge I would say we got.
Well, New York City quickly,
we put $1 billion in our new capital program. Since fare evasion and this whole phenomenon has definitely accelerated post-COVID, we put $1 billion in our new capital program for that. So we are going to start to replace all these turnstiles, which worked when I was a kid, but clearly are ineffective now in the era that we're living in. We got to replace them. You're absolutely right.
But are we going to put in walls to protect people at the edge of the subway?
Yeah.
Lisa, Mateo, and I are sitting at home with our offspring going, take the Uber. That's the reality, Janno.
Okay, so listen, we have started to put up barriers, chop, which is really literally these little half height walls along the platforms, and we're going to accelerate doing that. One complexity is those super high tech barriers that you get in European train stations and the newer stuff literally are too heavy for the platforms that our 100-year-old system has. So we can't do that, but we're going to start to accelerate these barriers so that anybody can position themselves so they feel safe on a subway platform. We don't want people to feel otherwise.
So I know in conceiving of this plan here, there are a lot of exceptions for different people who would be exempt from this congestion pricing. For example, the Hampton Jitney is exempt, yet firefighters' personal vehicles to get them into the firehouses are not. That seems kind of odd, but I know there's trade-offs everywhere.
Yeah, I mean, the point is, there was an across the board, this was done by a panel that was studied, that there were 130 separate requests for exemptions. Yep. And what they said is what we're going to exempt is we're going to exempt disabled people, we're going to give a huge discount to low-income people, and we're going to make sure that buses, which are a form of mass transit, whether they're operated by the MTA or otherwise, are exempt. That's where you get something like the Hampton Jitney. Now, in fairness, the Hampton Jitney has 50 people on it, and if those people drove, it would take up a lot of room. So it makes sense. we don't talk about personal vehicles. We're not going to choose who is special. The real goal here is to have people make rational choices. If they want to get their employer to pay them to drive in, that's fine. But that's not for the government to decide. The broad decision was what it was. But let's, today is really a historic day, and we ought to be focused on the fact that New York is back to leading, that we're doing what Mayor Bloomberg did in the old days, which is New York's a problem we're in the problem-solving business. We're dealing with our problems. And like government seems paralyzed in a lot of the United States. We are dealing with the realities of what it takes to be a 21st century city.
Daniel Moran is writing this up, and she's like, okay, we're leading the way. What's the next city to do this nationwide?
That's a good question. They all call
the door's locked over there. Danielle says you can't get out unless you answer the question.
Well, they all call me and they say and they ask for information because they're all taking a look at it.
Boston?
It could be because the key is we are so lucky because cities all over the United States have traffic problems like crazy, and it's crushing their economy and their development pattern and their appeal to employers. But only New York has this out-of-sight mass transit system. Maybe Boston, maybe Washington, maybe Chicago, because they have the alternative.
I'm cutting you some slack here. And folks, let me tell you, I'm not even part of this debate. I was below 57th Street once last year.
That's not happening.
I have no life. What can I went to Brooklyn a couple years ago. It was beautiful.
Come on over.
I thought it was Brooklyn, Massachusetts, and they said, no, it's Brooklyn, New York. Janno, let me cut to the chase here on the heart of the matter. Somebody once explained to me that New York is not London, we're not LA. You've got X number of bridges, X number of tunnels. It's a challenge here like no other challenge. Where's the bottleneck going to be with the congestion tax?
I think that the great thing is if you reduce traffic in general, there's less chance of bottlenecks across the board. That's the benefit, that even the people who have to drive or choose to drive are going to get a better experience, so their time is not wasted stuck in traffic. That's the goal. I don't know exactly where the bottleneck's going to be, but the goal is to have fewer of them.
So we're Wall Street, we're global Wall Street. Talk to us about this bond that's going to be issued. What is it, and when will you guys issue some bonds to raise capital to then invest back into the system?
Good question. So our CFO at the MTA, Kevin Willens, ran Muni Finance at Goldman for many years.
Okay, so
Kevin is when the governor dropped the toll by 40%, he took a hard look when that started to unfold at whether we could still raise the money that the law requires $15 billion to be raised from the revenues. And the answer is yes, we can do it. It will take slightly different structure. It'll take a different length of time, but we're going to be able to do it probably in multiple bond offerings rather than a single one. Originally, they planned a single bond offering, $15 billion. Now it's going to probably take a couple of years and a couple different offerings.
You've been more than generous with your time. I want to talk about the reality, and I'm speaking for the headquarters here, the investment Mr. Bloomberg has made. I should mention, folks, Mike Bloomberg, the former mayor of New York, and he is, of course, the owner of Bloomberg Radio, Bloomberg Television. I think, does he sign your paycheck?
I think he
signs
does.
mine as well.
Yep.
It's just simple. We go up 3rd Avenue, and it's ruined. I got a bike lane, I got bus lanes, I got some kind of parking in the middle. Basically, we've taken 6-lane streets, 5-lane streets down to 2, and you're living it as well. I got an Amazon truck on the right and a FedEx truck on the left. Now everybody's going up Park Avenue because they can't get up 3rd Avenue. That's just my little soap opera.
Yeah.
How do we get rid of the parking issue? Peter Coy at the New York Times has been brilliant on this. How do we change parking so 3rd Avenue isn't a driveway?
Well, I mean, listen, these are issues that the city of New York is going to have to wrestle with. You talked about how good your experience was in Paris, and Paris has done a lot to make it easier for bikes and pedestrians and to take away a little room for cars. That is part of the strategy that's been effectively followed. But I'll say this. when thankfully the city's getting rid of dining sheds, which took up a ton of room.
Dan Doctoroff was big on this.
Yeah, getting rid of dining sheds. We love our restaurants. They're rocking and socking after COVID, but we don't need to give out free real estate in the middle of the street anymore because people can't go indoors.
This is not.
So that is one factor. But I'm for more the bike lanes and certainly the bus lanes. If we can put 50 people on a bus who would otherwise be driving 50 individual cars, it's a net positive for the city, even for the drivers. So we're going to keep focused on a streetscape that works. But it's still a work in progress, Tom. We're still learning, and coming out of COVID with the dining sheds, I think we got to make some progress.
Sweeney demands we got breaking news here. Can you solve the New York Giants and the Jets? Can you
John is a Giants fan.
I'm a Giants fan, and I stopped paying attention about 2 months ago.
Well, there's some breaking news here. They decided this morning they're going to keep the GM, keep the coach. Joe Shane is GM, Brian Daboll is coach. They're going to be retained.
Janno, thank you so much. Janno Lieber, the MTA.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Your daily look at the front page is the Lisa Mateo moment. Lisa, what do you have?
Okay, this is a new Wall Street Journal analysis of test scores. This is really interesting. It shows girls have lost ground in reading, math, and science, and people are really concerned about it. This is since 2019. Test scores have dropped sharply. They're calling that the pandemic learning loss. Boys' scores have also dropped, but the girls' decline is worse. So the reason why they're saying it is because a rise in behavior patterns during the pandemic, it forced teachers to pay more attention to the boys because they tended to act out more in class. And then during and after the pandemic, a lot of the girls took on those caregiving household responsibilities, so it took their focus away from school. So I just thought it was a pretty interesting.
I mean, it's going to be years.
Yeah.
Years. Yes.
Sure.
That we learn what the real impact is going to be.
I got this wrong, and I learned about this from Bloomberg employees. The anecdotal evidence of our 21,000 employees, I learned the pandemic and our children's education just changed. That's all there is to it. What else do you have?
I can totally see it. The gambling industry is using a lot of artificial intelligence to get more money from Americans. So some of the ways they're doing it, startups, they're profiling gamblers. So they're feeding them content, games personalized to what they like, convincing them to stay longer, make bigger bets. They're using these large language models to generate a lot of things, automated summaries. And then even you get to the physical casinos using AI because they're using machine learning to optimize where they place the slot machines, because even that kind of matters.
It does. I mean, you're walking in and out of a casino floor, slot machines. For every ingress and egress, I learned that from doing casino investing.
What do you think AI will do to this surge in NFL football, which is a surge in betting?
Yeah.
I mean, they got to be using it to learn every single thing you need to do to win money on the Patriots because you knew they were going to beat the Bills.
Yep. And one tangible practical implementation of AI is advertising, because they can figure out better target who you are and what you want and what ads will work for you. That's happening today from Google and Facebook.
Lisa Mateo, thank you so much. Great to have that for us here. The newspapers with Lisa Mateo. We'll do much more of this into the week and into today as well.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.